Yeah, so you are all welcome back to tonight's class. This is lecture 2 of the lectures that we took yesterday on the payroll management class. So yesterday we were able to look at all the breakdown of what make up the gross salary based on the policy of this organization. Different companies have different policies, but for this organization that we're looking at, we decided to adopt a policy where we give basic salary. Base salary was 20%, and others were 10% each. So that is what we were able to adopt yesterday. So we adopted that for the training. And after we were able to do that, then we now have what we call the gross emolument. After you add all the basic together, the housing, the transportation, and any other deductions that appear. So we now have what we call the gross emolument. Now you also remember that the reason why we are breaking down this thing is purposely because of some certain calculations that we need to make. For instance, if you are calculating for pension, pension is always 8% of your basic housing and transportation. So you have to add these three items together. That's why it's good for you to be able to divide your salary into structures. Okay, so now we have basic, housing, and transportation. So when you add the three of them together, 8% is what of these three is what the employee is going to contribute. Then employer also is to contribute additional 10% of the basic housing and transportation. Remember, I also told us how we needed to record it on our accounting software. I told you that you are going to use Journal to carry it into the accounting software. So when the time comes, if you need more clarity, I can still go back to that. Our accounting software also shows how to go about it. So here, these are our pension. Now, our pension, we are having the addition of the basic housing and transportation that we charge 8% on it. Fine. The next thing we also looked at is our National Housing Fund. National Housing Fund is always calculated on the basic salary. So the basic salary, just multiply the basic salary by 2.5%. Okay, so and then you're going to get what your National Housing Fund is going to be. Then the next one that we also looked at is the NHITF and the ITF. And this NHITF and ITF, though they are computed on the gross emolument, but the actual answer is that this our gross emolument, or based on the NSITF and ITF, they are actually expenses, but they are not borne by the employee. It's the employer that needs to pay this on behalf of the employee. So just like the employer also is mandated to pay life insurance for his staff, so also you need to pay ITF and NSITF as well. So it's not deducted from the staff salary structure. So that's why you can see that in this place, I did not include any figure here. This place is blank. So it's blank. That means that because the employee did not pay it, therefore you cannot enjoy the tax relief with it. So you can see that it is blank. I took away the figure that are there because it's actually not the employee's responsibility to actually pay it. Then the next one we also looked at is we looked at life insurance. And I told you that the only life insurance that you're going to put here is that life insurance that the employee did for himself or for his spouse, not the one that the company did. The one that the company did cannot be claimed here. The one that the company did is not claimable here, but the one that the company did is an allowable expenses under the company income tax, but it's not an allowable expenses under payroll computation. So the only thing that is claimable under the payroll computation is that group life insurance that was done purposely by the employee himself. Okay, so apart from that, when we leave that, then we now came over to the rent relief. Now, just like for emphasis, the rent relief is actually an additional deduction from the gross salary. So that additional deduction, how do we arrive at it? How do we arrive at it? The way we arrive at it is that we say we are comparing our net pay. Sorry, I mean, we are comparing our actual 20% of our actual rent. Okay, 20% of our actual rent. We are comparing it to 500,000, and then we have to pick the lower of the two. So we have to pick the lower of the two. That is what we are doing. Okay, so what you should note is this. Note that the rent relief is actually you comparing your actual rent, 20% of your actual rent. We are comparing that figure, we are comparing it to 500,000. So you now pick among the two of them, which of them is lower? Is the 20% of my actual rent, is it lower than 500,000, or is it 500,000 that is lower than 20% of my actual rent? So that's what you're going to pick. So everything has been automated yesterday, and we did it together. For those people that were in the class, we did this automation together yesterday for you to be able to understand what is happening over here. So after we've automated that, fine, then we now say, okay, out of our gross salary, we now need to now deduct all these deductions, all these expenses that are allowed. So one of it is pension, national housing fund. If you did a group life by yourself, the premium that you paid on it is allowable. Then the rent relief also is another allowable deduction. When you do that, we are now going to have what we call the taxable income. So the taxable income is arrived at by taking the gross emolument and deducting the pension, the NHF, and every other deductions that are allowable. So once you are able to do that, then you are going to have what is remaining of your salary. That thing that is remaining of your salary is that portion that needs to be taxed. Okay. Then we'll now go further to now look at the tax table. Under the tax table now, this taxable income will be subjected to the tax computation. So under this place, we are looking at the tax table. Now they told us that this our taxable income, the first 800,000 of it will be subjected to 0% tax rate. So that means the first 800,000 of this our 1.5 million, we will charge it at 0%. Okay. Then the next thing is that the next 2.2 million will be subjected to 15% tax. Then after that, the next 9 million will be subjected to 18% tax. After that, the next 13 million, 13 will be subjected to, is it 21%? The next 13 million should be subjected to 21% tax. Then the next 25 million will be subjected to 23% tax. And then the last 50 million or whatever is remaining is going to be subjected to 25% tax. So that is how they were able to structure the tax table. Okay, so and then we have also automated it for you that you don't need to bother your head about all those things. We've used Excel formula to automate it. So you don't need to bother yourself about start thinking about, okay, how do I do that? The first 800,000, you don't need to bother yourself. Everything has been done for you to work for you. So all you need to do, in case you want to use the template, is this: just come to this place where we have the salary structure. Okay, this is where you need to now check in my company what is the basic salary that they are paying our staff. So you now use that is all you need to do. Just check for the salary structure and put in place everyone that is applicable to your company. So you put them together and all that. Then you don't need to touch any other thing. Every other thing has been formulated for you to operate for you and give you the desired result. So you don't need to bother yourself to come and touch the tax computation. You don't need it. You don't need to also bother yourself about every other deduction like pension, whatever it is. Everything has been done for you, and they are going to calculate automatically. All you need to do is just come to where you have your salary structure. In case the salary structure that you have does not fit into our salary structure, what is the gross salary of the staffs that you are operating with? Then what is their name? Put their name there. What is their designation? Are they engineers? Are they doctors? Are they what are they? So you put their designation, then now put their salary structure based on the policy of your organization. And after that, every other thing will compute for you on their own. Then at the end of the day, you're going to see what we call. Now, another thing I need to point out is that this minimum tax now is not applicable any longer. Okay, it has actually been abolished. We no longer have minimum tax for employees. We no longer have minimum tax for employees. So now it's just abolished. But I think for employers, we need to check for companies what is a law saying concerning companies. So we need to check it. I think for companies, the minimum tax should still be applicable, but they will change the rate. The rate at which that minimum tax is going to be computed will be changed. But those of us that give assignment to go and read up, I hope we have the answers ready, because I'm going to be asking us those answers on this call. Now, just so that for this payroll computation, I have to take away the minimum tax portion. There is nothing that should be put in the minimum tax portion. There is nothing in the minimum tax portion. Delete all the figure under your minimum tax portion. You don't need it. Then the next thing is that after you've done that, you are now going to have your computed tax. So this is your computed tax that we've computed based on using the tax table. This is your computed tax that we've computed. Then we now, because it's an annual tax, we use our gross salary for the year. Okay, that's what we use. So if you go and check the gross salary that we're using, you discover that it's a gross salary multiplied by 12. So you can see that this gross salary we are using is the annual gross salary. You must take note of it. Is the annual gross salary. We have the monthly gross salary. For those people that want to calculate for monthly alone, you can simply use your monthly gross salary. Okay, instead of us to be using our annual, you can decide to use your monthly gross salary. And know that the payee you're going to get also is going to be the monthly payee. However, so that's just it. So the salary you are using determines whether you're going to get monthly or you're going to get annual, because we are using annual gross. That's why we are also calculating annual tax. So what do you need to do? Once you get the annual tax, to now get the monthly tax, simply divide it by 2. Once you divide it by 2, you get the payee that is due. You get the payee that is actually due. So that is what we have over here. So that's what we have over here. So that is how we're able to generate this. Remember that the minimum tax is not applicable. So is that our computed tax that we're going to stick to. So once you have your computed tax that you have, you now divide it by 12 to get what the monthly payee or tax deducted should be. So, and which is what we have over here. So this is our monthly tax that is actually payable. Okay, so this is our monthly tax. So once you have been able to get this monthly tax, the next thing is that you want to go and remit. Let's assume we are in the month of December and we needed to remit tax for our staff. Okay, because this is the end of the year. We don't want to leave any stone unturned. We don't want to take any tax into the coming year. Okay, so what we can do is that we can actually pay our payee anytime from the time we pay our salary. Okay, you don't need to wait till 10th of the second month before you remit. once you deducted once you have paid salary to your staff and you've deducted those salary, you can quickly go and remit it. It's not like VAT that you need to wait till the end of the month, okay, for payroll. Once you have paid your staff the salary, you already know what the payee computation should be. So you can easily go and remit it. So let's now see if you want to remit, how do we go about remitting payee? How do we go about remitting payee? So let me quickly show us how we go about that. Does anybody have any question based on what I just finished explaining? Or can I go on with the lecture? Does anybody have any question? Okay, so oh yeah, oh yeah. Okay, I'm listening.
Not a question per se. It's just an observation.
All right.
Just like you said that in order to compute the monthly payee from the monthly salary,
Yes, sir.
we have to bear in mind that the deduction of the 800,000 as well needed to be divided by 12 if we want to do that.
Yeah, okay. Thank you
So
for
all those things as well will be divided by 12. So the best approach is what you have done, get the annual and divide by 12 to get the monthly.
yeah. So thank you very much for that. So so for those people that okay, so for those people that are on the call that have been clamoring for let's do it by month, by month, by month, it's better for you to actually approach it by looking at the yearly method. It's very important because if you are doing by month, then your tax table is given to you based on the annual. So if you want to do by month also, then that we want you to go and add, to go and touch what you have in the tax table. So, and we don't want to touch that because that has been automated already. So I will advise us the best approach to follow is just the yearly method. Once you now get your payee computation for the year, you can now divide it by 12 to get what the monthly payee should be. So I think that is what we should adopt, everybody. Don't think about. So since year you are able to get monthly. It's not as if the annual will not give you monthly. All you need to do is divide it by 12. Why not just follow the normal templates that has been given to us in the trading? So that's just that. So that's that. So now we now go further now to see how we can remit this tax that has been deducted. So what do we need to do? What are the procedures? So to remit payee, we have what we call e-tax portal. So simply go to your Chrome browser. When you go to your Chrome browser, for instance, so this is a Chrome browser, for instance. Let me go and open a new file. Let me open a new, what's it called? So yeah, so this is a new Chrome browser. So what you need to do is that just type e-tax, e-tax. Once you type e-tax in your browser, it brings up all this stuff. Just click on e-tax LRS. Once you click on e-tax LRS, then you come to this place. When you come to this place, you see LRS e-tax. Pay taxes easily, file returns instantly, pay your taxes online, file them instantly, and get your tax certificates, all with just the click of a button. So simply click on this place. Once you click on it, then it opens this interface. Okay, so then the next thing is that you want to go to the top where you have login. But if if you've not registered before, you can simply come here, register as a taxpayer in case you've not registered before. So under this register as a taxpayer, let's click on it and see what is applicable. So under this register as a taxpayer, you can decide to register as an individual or register as a corporate organization. So you can do that. But that is not what we want to do here, except if you want to create tax ID for your employees. And those employees, they don't have
What is
ID.
going on?
Hello, can you hear me?
I can't see what you are. No, I can't see what
Yeah.
you are.
Okay, so
Okay, sir.
Madam Modupe, I think it's from your end. But for the sake of emphasis, let me see stop sharing and let me start sharing again. It's from your network. But let me start sharing again. Okay, so I want to start sharing again. So if you can see my screen, Madam Modupe, but if you cannot see it, kindly log out and log in again. Thank you. So when you come back to your Chrome browser, okay, when you are on your Chrome browser, just type e-tax. Once you type e-tax, it's going to show us. Let me go back. So once you type e-tax, it will bring up a lot of search results. So from there, just look for anyone like LRS e-tax. So just click on it. Once you click on LRS e-tax, then it launches to this place where we have. So here you can verify your TCC. You can see the tax calculator. For those people that want to know how to calculate your whatever, you can do it here. Then e-tax for what are they putting here? E-tax for individual, for corporation, for consultant. You can also select it here and a lot of other things. But we just want to log in, okay? Because we want to pay, we're a company, we want to pay payee for our staff. So what do we need to do? We come to this place where you have login. You click on login. Once you click on login, it opens this place for us. So here you see where it call this one taxpayer ID. So this place now you can either put an ID for an individual or you can put an ID for a company. So a tax ID for individual we always start with N, while a tax ID for a company we always start with C. So because we are a company and want to remit tax for our staff, we are going to use a company tax ID. Okay, so let me quickly put that. 2 minutes. Just give me 2 minutes. Let me quickly put that. All right. So yeah. So the tax ID now is going to be C dash. I'm putting a tax ID 60 and 56. So I put the tax ID for the company that I want to remit for. Then under the password, I also put the password of the company. So let me see the password. So I've put the password of the company. Now you can see before I click on login, you can also see this place where they say create new tax ID. So from here, if you don't have a tax ID or you want to generate a tax ID for your staff, you can easily come over here. You will see where it say create new tax ID. You can also go through the other area I went to the other time to access it. So here, let's just click on login here. So I'm clicking on login now and we are in. So what do we want to do? The next thing is once you are in like this, the next thing is that go to the left-hand side of your screen. So you can see I'm at the left-hand side of the screen now. Under this left-hand side, you are going to see a lot of drop down. We have profile, we have assessment, we have objections, we have tax offices, we have payment, we have corporate returns, LS, LAS, PPPA, and so on and so forth. Consultant requests and so on. So what you need to concentrate on is that we want to pay. So come to payment. So once you come to payment, you click on payment, then there are other drop down that we showed. So from your drop down, click on generate slash pay bill. So that's what you're going to click on. Generate, generate slash pay bill. So just click on it. Once you click on generate slash pay bill, this interface will show. Now the next thing we want to do is that from this interface, we see that the taxpayer number is showing at the top. Fine. The next thing you want to do is that now check this way, they call it employee type. What kind of employee are we paying for? Are we paying for a local employee, a Nigerian, or are we paying for an expatriate? Are we paying for somebody that is outside the country? So just click on this employee type. Once you click on the employee type, you will see where it has local, you see where it has expatriate. So because we're paying for local, you click on local, that's the first thing to click on. The next thing is that you want to click on an agency that you want to pay. Which of the tax agency do you want to pay? Are you paying to the LRS office in Badagry? Are you paying to the LRS office in Ekpe? Which of the LRS is the one that your company is under? Okay, so for this one, let's just assume that I want to select Alausa tax office. So let me just search for Alausa tax office. We have a lot of tax offices here. So just select the one that your company falls under based on geography. Okay, there's a place where your company is falling under. So that is where you are going to pay your tax to. So I want to select Alausa, but I've not seen it. But let me check well.
We have passed Alausa.
Okay. Yeah. I have okay, yeah. So this is it. So this Alausa, I've selected Alausa tax office. Then what kind of revenue do I want to remit? Am I trying to pay payee? Am I trying to pay what am I trying to pay? There are a lot of things that you're going to pay here. The first thing you're going to see is stamp duties is here, business premises. By January 1st, people you start seeing people filing for business premises, they are paying business premises, they are paying development levy, they are filing their annual returns. So just like the way you file annual returns for people that have CAC, okay, people that file annual returns for people that, so even for LRS also, you need to file your annual returns. And I think the deadline for filing of annual returns is going to be 31st of January. So in case you don't know how to file annual returns, you can always contact a professional or a tax practitioner to assist you. So by January, most businesses will be filing, they'll be paying business premises, they'll be paying development levy, and also they will also be filing their annual returns to LRS. So don't forget about that. So on this, our revenue selection, we can either pay direct assessment. Okay, we can pay direct assessment, you can pay development levy, you can pay anything you want to pay, capital gain tax, you can pay anything. So here we are looking for payee because that's what we intend to remit. So payee. So there, this is here. So now we have two payee that is here. The first one is pay as you earn. This is what we need, not personal home remit. We need pay as you earn because it's for our staff. So we select pay as you earn. Once you select pay as you earn, then what currency are we paying? We are paying Naira. Fine. So automatically we are paying Naira. Don't go and select any other currency. Then we are paying for local people. So if we are paying for expatriate, probably we can decide to, if we pay them in dollars, for instance, or whatever it is, we can decide to select how we are paying the tax, okay, or how do we deduct the tax. But here, we now come here, what month are we looking at? We select January, December, sorry. Let's assume we are paying for December. Then the next thing you want to do is that you want to come over here. Here, they say upload instruction. Here you have download a sample template here, or upload the file below and submit. The maximum size should not be more than 5 megabytes. So what do we do? Because I want to assume we don't have any template we're working with, let's just click on here, download template. So let's click on download template. Once you click on it, then it has downloaded. You can see payee payroll. So I want to double tap on it, and it has opened. So this is how the template looks like. So what are the likely things that you need for this template? You need the name of the staffs, you need their tax ID, you need their nationality, whether they're Nigerians, designation, are they accountant, are they doctors? So what are they? So let me start by filling my name. So I come here, I say Johnson Leke. Then I'll put my tax ID also. So because I'm an individual, I'm not a company, you say N dash, then let me look for my tax ID. My tax ID. Just give me 2 minutes. Let me quickly look for it. My tax ID. Okay, yeah. So I've seen my tax ID now. So N dash 38, 58, 643. So I've gotten my tax ID. Then the next thing is, who am I? Am I a Nigerian nationality? I'm a Nigerian, so I put Nigerian. Sorry. Then designation. Let's assume I'm the accountant.
But mo fẹ́ ṣe
the
class ni pé wọ́n máa ń send record.
Madam, you are on a. Do you know you are disturbing this call? Please make sure you are muted when you join the call.
Sorry,
Thank you.
sir.
No problem. Okay, so we come back over here. Now, once you, okay, we've gotten the file we are using. Where am I? Where am I? Where am I? Is it this one? Is it this one? Is it this one? Yeah, so this is what I'm using. So I've been able to put that this designation, I'm an accountant. Then the next thing I'm asking is telling us how many months am I filing. Let's say I'm filing for 1 month. Then the next thing is that we're now going to go and check our payroll computation. What is our basic? Based on our computation, what is our housing? What is our transportation? Then, do you have furniture? Do you have education? Do you have lunch? Do you have any of these things? Now, remember the structure of our payroll. Our structure is that the basic is going to be 20% of our gross salary. So let's go back to that, our computation. We come back to this place. We go and select. So let's say we want to pay for the first 5 people over here. So what we do is that we might copy the first 5 people. 1, 2, 3, 4, 5. So we copy it. So once we copy, we come back to our template. We come back to this template, and then we come to pay special. So pay special. So that's that. Then the next one, because I don't know what their tax ID is, but you need to get their tax ID. So I'm just going to autofill my tax ID so that it's going to based on is what's it called? It's a relative reference, so automatically it generated tax ID for other people on the call. Fine. Then the next one, let's assume they are all Nigerians as well. So we copy nationality, Nigerian, and then we put it over here. Then the next thing we want to look at for is based on our computation, we also know that these people, they are actually instrumentation engineers. So they are instrumentation engineers. So 1, 2, 3, 4, 5. So they're instrumentation engineers. So when I come back to our computation here, we come and put here autofill it. Sorry, space special. That's that. Then how many months are we paying for them? We are also paying 1 month each for them. So put 1 month here. Fine. So once we have done that, the next thing we want to do is that our basic now. We now come over here. We're going to copy the first basic for them. So here, this is the basic for them. So I'm going to copy the first 5. So once I copy the first 5, remember that our basic, the structure is our basic is 20%, right? So I come over here, then I pay special again. Pay special. Oh, sorry, I'm not supposed to do that. Ctrl Z. So I'm going to start from here because my name is the first on the list. So I'm now come over here. I paste it special. So for myself, let's assume my basic is like 500. I'm just giving an analogy, okay? So once you've gotten that, okay, now we now know that others are going to be 10% because I told us that the structure is going to be, our basic is going to be 20%, others are going to be 10%. So I'm going to say equal to 10, sorry, no, equal to what is here, because this is 20% already, 20%, right? Then divided by 2. So when I click on OK, so now since it's 20% divided by 2, then the next thing is I want to autofill it also. So we want to autofill it. Okay, so now this is the 20% divided by 2. Sorry, yeah, 20% divided by 2, making it 10. So I'll copy and then I will now paste it special so that there won't be formula there again. And also that is what is going to be applicable for other places. So utility, others, and so on and so forth. So Ctrl V. So how many do we have? We have 1, 2, 3, 4, 5, 6, 7, 8. Naturally, it's supposed to be 8, but let's assume that we give them bonus, we give them 13-month salary, we give them utility, we give them others, then our NHF, our whatever. So based on our computation, our NHF, we know what our NHF is based on our computation. We know what our NHIS is. Then we know what our pension is. Everything is going to be taken from the table. So let's quickly, once we are done with that, we know what our group life as well is. We put it there. Then at the end of the day, you have the gross. The gross. So that's equal to, we now say some open brackets. We now come over here. We now select. We are adding everything across. So we now add everything across. We click on it. Then here we now double click to fill. Okay, so now once we've double clicked the field, we now go on to, hold on, no, I think I made a mistake, right? The mistake
Yes,
I
you
made
did,
is
sir.
that,
Yes, you
yeah, I made a
did.
mistake. Now,
It's not 10%.
come
Even
again?
the housing, the transport are not 10%.
No, they are 10% actually. So I think what we
The
need to look at is that,
NHIS, everything has to be deducted. You are not
yes,
summing
it has to be
everything. You are not
deducted.
summing all the
Yes,
stuff.
yes. Thank you. So it has to be deducted. That's what I wanted to say. So we know what I'm looking at is that I overstated the gross income. That was what I was trying to get clarity. And also don't forget that since our basic is 20%, then it automatically means that we should only have 8 additional team that we're going to put figures for. So we have 1, 2, 3, 4, 5, 6, 7, 8. So that when you add 8 plus 1, 8, 30% is 80, then plus 20%, making it 100. So that means for this one, for this 13 months and others, we will delete it from here. So we delete this 3. Now the 13-month salary could be a figure. You can put it there, whatever it is. Utility can also be another figure. Others can also be another figure. But I don't want to use based on our computation before is what I'm working on. Then the next thing is that what we are going to do is that we're going to now adjust this formula. I'm going to say sum these. Then once we've done that, we now say minus so we now say minus the sum of oh, I made a miss. So let me adjust this one. So this is going to stop at n. So let me take this one away from you. This is going to be n. So this is going to be n. Okay, so that is n. Then I say some when I come here and somebody is raising his hand. What's the issue?
Yes, I want to say that since we are using Excel, those figures that needed to be deducted can be entered as negative. Then we just use some.
Yeah. That's true. Yeah. However, I think I've done the needful. So yeah, so let's just leave it like that. So, but there's no figure here actually, but it's just that we are just trying to get the formula right so that once we put it there, and even once we upload this thing now, this thing, because this is a CSV file. So once you upload a CSV file, it takes away whatever formula you put in it. So it's only the figure that will not be there. Everything will not be just normal plain figure. So that is how service file behave. So at the end of the day, you're going to have what you call your tax payable based on our computation. We have already computed it before based on our PAYE, payroll, whatever. You already have your tax payable over here. So you can come over to this place now and let's go and pick our tax payable based on our computation before. You can decide to go and fill in all these ones there, fine. But we are not doing that because we don't want to waste time. So based on our computation, we are paying per month. So we come to where the monthly is, we copy just the first 5 people. So 1, 2, 3, 4, 5. So I copy, then I come over to this place and I come over to this place and also I autofill it, not from here, from the first one here. So I will to fill it downward. Then let me just assume a figure for myself. Let's say I am to pay this amount. Okay, so at the end of the day, we have the whole figure there. So it's not necessary that you must put all these figures. In case you don't have all these figures, you can also just put your gross that you know of, put your gross here, and then from your computation table, take your tax payable, put it here. It will still work. Okay, so once we've had this one done like this, we can decide to save it as let's save it as something that we can remember. So let me put it under my downloads so that when I go to my downloads, I can remember what it is. So I can say payroll 2, payroll sample for training 2. Okay, fine. So I now save it under my downloads. So now the next thing we want to do is we have saved it. Okay, we can decide to close it and go and check how it's going to be in the. So now I've saved it. So let's now go back to this place. I know this would have logged us out. So we need to log in again. So I now say C-12560. Is this 56 or something? Let me check. Hold on, I'm coming up. Okay, just 2 minutes, please. All right, yeah, so that is 56. Then the password now. Oh, sorry. Then here will come over here. So then we log in. So now we go back to where we were. We've been able to download. So you come back to the left-hand side of your screen, go to payment, you click on payment, then you click on generate/pay bill. You click on it, then you come over here. Now remember, I told us the employee type is local because we're paying for local people, Nigerians. Then our agency, we can select any agency actually. So let's select anyone, fine. But note, make sure that you're not just selecting anyone. Make sure you are selecting the agency that your company falls under, because there are different agencies in the country, but there's a particular agency where your company fall under. So you can go and ask questions in case you are not sure about it. Then the next one is that you now want to select the revenue you want to pay. What liability are you paying? So let's say if you are paying business premises, select business premises. So in January, a lot of people will be paying business premises, they'll be paying development levy. So just come and select business premises, select development levy, and all that. So, but we are not paying those ones. We are trying to remit. Even if you want to pay direct assessment, you can also come and do it here. Just select direct assessment, and another template will show. And is that template that you see that you're going to use to go and capture everything into capture. So I will also show us later. But let's just go and select our PAYE. You just come to where PAYE is. So yeah, so the one we are looking for is pay as you earn. Click on pay as you earn. Then the currency is Naira, fine. Then we go downwards. We are selecting the month. The applicable month is December. So now we already have a file that we have populated. So that file, we now go and select it. We want to upload that file. So click on choose file. Once I click on choose file, then I come to my download. Then I come to that file that I've saved. Make sure you are saving your file in a place where you can easily access it. So I now select this file. Then I click on open, and automatically you can see automatically it has so it's telling me that the total gross based on my computation is this amount. Then it's also telling me that based on my computation, this is the tax that paid. So what do I do? Quickly, I can go down and put the remarks. Probably I say January salary, then I can click on generate bill. Okay. So once you click on generate bill, let me show you what you will see. So because I don't want to do this, this is wrong. This is not for the company. I don't want to do this. So I will leave this like this. Then I will now come and show us how it used to be when you've generated an actual bill. So we're going to come back to this. When you have generated an actual bill, let me show you how it's going to appear. So I want to come here.
Hello,
And,
sir.
yeah, I can hear you.
Yes. Is it a must that the template by LRS has to be used, or can any other template be uploaded?
Please use now. Number one, it's a CSV file that is recommended. You cannot upload any other file. It will not accept it. So quickly go anything you're paying for any of those tax agency, check the portal. There's always a sample file that you need to populate. It's easier for you to do that. Okay, it's easier for you to check the portal for a sample file that you need to populate. It saves you a lot of stress, a lot of time, because you may not know the format at which they want you to populate it. So better go and check it online. Is that okay, sir?
Okay, sir. Okay.
Yeah. So then the next thing we want to do is that we want to check for, I think I have a sample file today. I'm going to check for what it is. Okay, so let me go back to that place. Let me go and check for a sample file. So let me close this because I don't want to use this. Let me go back. So let me come back to this place. Pay, generate bill. So let me come back to this page. I want to work on a sample file. I want to show us a sample file. So now once you create that bill, it's going to appear. Let me scroll down. It's going to appear. I want to show you how the bill is going to appear. So let's scroll up, or let me click on any of this one. So let me just click on download bill over here. Okay, so now this is a bill. Once you click on generate bill, it's going to appear this way. Okay, so what is appear this way? What is the next thing you need to do? The next thing you need to do is this bill, don't throw it away, keep it well, because you will need it later. Now, the next thing you need to do is that how much are we expected to pay? In this place, we are expected to pay 210,000. So this 210,000, you need to pay it. Then how do you pay it? Prior to this period, we normally take this our bill to the bank. Okay, the bank will assist us to pay it, and then they will now also help us to generate a hardcover tax certificate. I don't know if we still remember those early days, 2021, 2022, we do that. But these days now, they make it even more simple for us. There is this bank, they call it Ibile Microfinance Bank. So once you generate your bill like this, just take the amount you need to pay. Don't bother taking any other thing. You don't even need the bill reference. You don't need anything. Just take the amount that you need to pay. Just go and go to your bank. Okay, from your bank, the way you pay normal, the way you transfer to any other person, just go and transfer to the Ibile Microfinance Bank. They have an account that you are going to put. You transfer to them. So once you transfer to them, download the receipt as evidence that you have transferred to Ibile Microfinance Bank. So once you do that, you take that receipt plus this bill that you've generated. These two, you now forward it to your tax officer. The tax officer that is covering your area, your company and all that. You forward this bill and the evidence of payment that you're able to generate when you paid to Ibile Microfinance Bank. Forward it to that tax officer, and that tax officer will assist you to now get the tax certificate. So he has a way of reconciling with Microfinance Bank. When they have confirmed that you actually paid, okay, the receipt you sent to them, they confirm that you actually paid to Ibile Microfinance Bank. Then they will go and do their reconciliation at the back, and then they will now credit this amount to your account. So once this amount enters your account, remember when we did this, our stuff. Sorry, not this one. When we did, oh, not this one. I think I've closed it. Let me go and open it again. When we did this, our whatever, we discovered that we added some certain people because we needed to pay their tax. So their TIN number that we added to it, once they are able to reconcile the payment to be sure that you actually made that payment, they will not credit each person's tax ID. So each person is having an account with the government. So that tax ID is signifying an account. So once they pay you, you discover that everybody that has tax ID, they will get an alert. Some people get a mail sent to their mailbox. You will see the amount that was paid into your tax ID. You see whose company is paying, what amount did they pay, what period did they pay for, and all those things. So it's as easy as that. There's nothing more difficult than this. So once you have been able to pay or to remit your payee, is somebody raising his hand? Okay, so I have a question. Okay, somebody is asking a question. I have a question. I thought payee remitted to FRS and not. Okay.
No.
So OT Jacinta. Yeah, so payee, they are actually remitted to the state, not to the federal government. Okay, they're always remitted to the state. So the only payee that you can remit to the state, that was based on the old law. Okay, based on the old law, they said that for what is their name now? For all those police force, army, all those people, they remit to FRS. Okay, and even people that are in
I live in Abuja.
Abuja also, they also remit to FRS. But with the new tax law now I think they say that the armed forces, they no longer pay tax. So they gave them that waiver that they don't need to pay tax on their income. You know, when they go on to risk their life for the citizens, so they just say that it's only fair that they should not pay tax. Okay, they just give them that waiver. So Bello,
Okay, hello, sir. I have a question on that.
okay,
On this principle of residency, if you have staff that they stay in different states, how do
okay.
you remit their pay, considering the principle of residency of the taxpayers?
Yes. So there are two approaches that you can follow. The first approach is that you don't want to stress them. Okay, you don't want to stress tax authorities. You want to do the needful. So for staff that you have in Lagos, file tax for them based on Lagos principle. For tax that you have outside Lagos, like in Abuja, all those places, you need to file tax for them based on the applicable modus operandi that is operational in those states. However, if you are someone that you don't want to stress yourself, okay, you can pay everything to Lagos state government. Then when the time comes for them to the only side effect is that, hello, hold on, I'm coming. I will give you opportunity to talk. So the only bad thing when you do that is that when those people that you pay tax for, when they catch them on the road, probably they beat traffic lights, and then they now arrest them. And they say, okay, prove that you have paid tax. Okay, now I'm not sure that state we accept any receipt from another state. It is expected that you should pay tax for them based on the state of residency. So, however, but if you don't want to do that, you don't want to bother yourself about that, you can pay everything to Lagos State, and then when the time comes, Lagos State and the other state, they will sit and do reconciliation. Okay, they'll sit and do reconciliation, but you are giving them work to do. So the best approach is you need to file tax for the staff that are in Lagos, file it to Lagos State LRS, the one that is in Port Harcourt, file to Port Harcourt, and so on and so forth. Do you understand that?
I get your point. I'm not looking at somebody staying in Mowe Bafo, working in Lagos Island, which is a common incident.
Yeah, so
I
somebody
think,
that is
sir, okay. I
go on.
think Yeah, the payee is paid based on where you reside, not where you work. Like for those who reside in Mowe Bafo, they are under Ogun State. So they are supposed to pay their payee to Ogun State, not Lagos State. Despite that they are working in Lagos State, but their resident or their place of residence is Ogun State. So they will pay their payee in Ogun State.
Yeah. So that's very correct. So we've had this situation come up severally where at the end of the day, we discovered that at the end of the day is Ogun State Tax Authority and Lagos State Tax Authority that will now sit down and do reconciliation in case you have been paying wrongly for that staff. But your own duty as a company is that make sure you are not owing. Because at the time that they're going to come for you, they will come and check your record. So the only defense you can give is that we actually paid. Look at the receipt, but we paid to Lagos State government. So now that is the only defense. But if they are if they reside in Ogun State and then they come to work in Lagos State, and because of that, you decide not to pay for them and you are deducting it from their salary, they will come for you. So the best thing is that if you have the time, make sure you file for Lagos for the staff that are residing in Lagos, and the staff that are residing in Ogun State, make sure you also file for them in Ogun State. So it's very important so that there won't be mix-up. But in all, once you deduct payee, make sure you remit it. Okay, Oye, Omoye, I can hear you. Hello, your hand is up. Okay, so I want to assume that that is not actually the person doesn't have any question. So let's now go back to our what we are looking at. So we've looked at how to actually file our payee. Okay, let's now go and check how do we do assessment. For instance, you can have a director. What people do most of the time is that they can have an executive director that is involved in the day-to-day activity of the organization. Okay, so once you have an executive director, people are tempted to pay salary to the director like any other person, and then they're also tempted to also go and pay payee for that director. But the tax man is saying no, do not do it that way. Make sure for your director you are doing direct assessment for them. So two ways you can do direct assessment. You can log in from the company, or you can take the director's login, also login details. You can also take it and put it here. Remember, the director is going to appear as an individual, so the task ID is going to start from n-so. Put the director's password and then log in. So let's assume we want to do that assessment through the company. So you put your normal company ID and all that, then click on login. So once you click on login, okay, then you now go to the same place you went to when you wanted to pay payee. Just come to the left hand side of the screen, look for payment. When you look for payment, then look for generate/pay bill. Click on it. Once you click on that, then you have all these. Select the revenue agency, any of them. Make sure that it's the agency that covers your location, okay, where you are resided, then where your company is located. Then the next thing is that you also check for the revenue. What revenue do you want to pay, and what type of employee? Is our director, is he a foreigner or is he a local person in Nigerian? So select local, then you now select the revenue that you want to pay. So you want to pay direct assessment. So over here you can see direct assessment. Click on direct assessment and select the date. Probably you want to pay for from 1st of January, 1st of December to 31st December. Okay, so that is the period we want to pay direct assessment for. Then the next thing is that you now come and check this button that is here. Check the button. Once you check the button, sorry. Once you check this button, automatically you are going to see something like this. So it's going to tell you to download a sample template, which you are going to do. So you can download a sample template, which you are also going to populate. When you populate the sample template, then you come out upload it. So let's download the sample template quickly. So then we open it. So this is the sample template. So for a direct assessment, they don't stress you. It's only 3 things that they require of you. The first thing is, what is the taxpayer ID of your director? So you put the taxpayer ID of the director, fine. The next thing is that also put the name of that director. Then how much are you paying for him? Put the amount. And once you have done that, then save. Once you save it, come back to where you are over here. Once you come back, so not here. Is this where I am? I am. No, I'm not. I don't think so. Well, let me see. Or is it here? Yeah. So you come back to where you are here. So once you come back to where you are here, you come and choose file. Once you choose file, you come over and select whatever file you want to put and click on open. So you can see there's this generate bill direct assessment. So when you click on it, you now click on open. Now, because we did not put any figure in that stuff, it's going to tell you data can't be blank. You need to put a figure in it. So once you put a figure in it and those details that are required, just click on generate and automatically it generates the tax that is payable for that director. I hope we are together. Are we together?
Yes, we are.
Yes, sir.
Yes, sir.
Okay.
Yes, we are together, sir.
So that's how to pay your direct assessment. That's how to also pay your payee. So once you generate a bill,
Then,
you know, I
So I have a question, sir. For companies having less than 5 staff, how do you treat them?
Yeah, for company having less than 5 staff, the question to ask is that did you deduct payee from them?
Okay. Supposing payee is not, let's assume that payee is not deducted. So what happens?
And well, according to the law, you know, they say that for you to, I think is actually your statutory, is your obligation to actually deduct payee from their salary. So once you have deducted it, you must remit it. So that's what I can say. But probably somebody has a contrary opinion. So once you have deducted it, that is your statutory obligation to actually deduct payee from their salary.
If supposing their income is lower than is 80,000 monthly, in line with the new law.
If by the new law, so this is what you do. Once you put it in this your tax, whatever, this your tax stuff, and you are seeing that your tax payable is actually 0, okay, then for that period you might need to you might need to carry your tax officer that is covering that your locality, carry the person along. Now, okay, based on my computation, all our staff this period, they are not to pay tax. So he will advise you whether this is what you should do or what. So once you've calculated it and you see that they don't have any tax to pay, then I don't see the need for you to actually, because you can see now when we came to this place to put our directors, whatever, is showing that we cannot upload a nil whatever to it. Alternatively, for VAT, they normally file as means VAT now. You know, you can file nil, I mean whatever it is. But for this one, you need to carry your tax officer along. He or she is the tax officer of your company for a reason. So whatever challenge you are facing in terms of tax, they should be able to guide you on what to do and what not to do. Do you understand that, sir?
Okay, sir.
Yeah. So that is that. So any other question? Can we move on to VAT? Please let's mute our mic. So let's now go straight to VAT now. We are done with this one. So the next thing you want to do is once you are trying to pay your VAT, you are paying it on another portal. But here, I also saw that VAT is also here. So let's check for VAT that is here. I'm not sure a lot of people know that VAT is here. So let's see. I think I saw VAT the other time. So value added tax. So let's say we want to pay value added tax. I saw it here, but I'm curious. I want to see how it's going to be. Since I saw value added tax here, let me see how it's going to be. So I think there should be a template that will also download. So here, now, it's giving me that there's a template to download. So let's check this VAT template under PAYE. Let's see what it looks like. Okay, so here we have the taxpayer ID, we have beneficiary name, and we have the amount. So it's not like the way we pay our normal VAT. Okay, so it's not the way we pay our normal VAT. So that is that. So let's go and check how we do normal VAT. So this one now they are showing us exactly the information we need to supply when we are paying that when we are doing direct assessments. So this is not what we want. Let's now go and look at what we need to do when we are paying VAT. So now I will go back to this our template. So this is it here. So I want to close this one, believing that we are done with LRS. I also told us we are going to do E-invoicing. Fine. So let me quickly open another sheet. So here, what you need to type is you need to type tax promax. So let's type tax promax. So this is tax promax. So just click on tax promax. Automatically you have this. So you also click on the first drop down that is showing, which is tax promax. You click on it. Then it's going to open. Yeah, so this is what we have over here. Let's see, it's still loading. So this is what we have. Click on login. I guess the network is a little bit slow today, so I don't know why. Okay, so we have clicked on login. Then we need to put an email address. We also need to put a password. So what I will need to do is let me check if I can get an email address and a password that we can actually use for this trading. Let me quickly check an email address and a password we can use for the trading. Yeah, I think I've seen one. Okay, so I've seen one. Okay. Okay, so here we now have our password. Okay, so let's now, let me see. The network is a little bit on the slow side. Okay, so this is what we have. You can see the interface of tax promax. So automatically, you already have all the tax, find tax arranged below. So what we want to do is that you want to go to taxes due. So that's the place you want to go to, taxes due. So you click on taxes due. Once you click on taxes due, this is where you're going to see whether there is what's it called? There is VAT to pay, or there is CIT that you need to pay. So this is where you see it. So when you click on that taxes due is going to tell you how many taxes is still outstanding. So for this company, it's showing us that one tax is actually outstanding, and that tax is actually the VAT. So once you click on it to open it, you can see here one tax is outstanding. So, and the period is from November 21st for that period to December 21st. So this is like the grace period that they gave you. The grace period that they gave you. So within this period, you must have remitted all your taxes for the month of November. So November preceding year basis, any sales that you make the previous year, you must remit it from 21st of that same month. So any sales you make in a preceding month, you must remit it from 21st of that month to 21st of another month. So if I made a sales for November, all the sales I made in November, I am entitled to remit them. I can remit them at the end of November. I can decide to wait till 21st of December to remit them. Okay. So, and that is what most companies do. Some companies, they actually pay early, while some they wait till between 20th, 21st, or 19th, or 18th of October. So what you now do is that you now come straight to this place where you have process. Click on process. Now, when you click on process, it will not come to this page where you need to go and pay. There are certain places that you need to get to. They are also going to give you some schedules, just like the way we're able to get a template from e-tax portal. We're also going to get a template that we need to go and populate. So let me just open a template for you. So like a template like this, it's going to be provided for you. Okay, when you go to that e-tax portal, sorry, that VAT tax format. So you're going to see a template like this. So that template, it has a beneficiary name, beneficiary item, item cost, item description, VAT status. So now these items, these things, these are where you now put all the sales that you made for the year. Sorry, for the month, sorry. For instance, we are in December, so I need to put all the sales I made in the month of November. So what do? The first name appearing here is Mr. Adebiyi. Let's say Mr. Adebiyi now, he came to transact with us, right? So I need to get his TIN number. Okay, I need to get it. I need to get what item did he purchase from us. We actually did a vehicle inspection for him. He paid us for it, and so on and so forth. So how do we now get the item cost? This item cost is very important. So let me just use this to quickly show us how to get the item cost. Okay. So now let's assume I want to collect VAT. Now, any company that has a TIN, a tax ID, automatically you are an agent of the government, and it is your duty to actually collect tax on behalf of the government. So collect VAT from those customers that come to buy from you. So as the customers are paying you, they're also paying the government money. So VAT is government money. So once you collect that money, you not only collect your own money, it's assumed that you also collect money on behalf of government. So let's assume I'm organizing a training, and that training is actually 10,000. So the training is 10,000. If I should collect 10,000 from participants, what government will do is that government assumes that this 10,000 I collected, that it is not 100%, that this 10,000 is actually 107.5%, meaning that I have also factored in the fact that I need to pay government when I was fixing this price. So the right thing to do is don't tell them your training fee is actually 100,000. Don't tell your customers that pay me 100,000. Sorry, I mean 10,000. Don't tell your people that are participating in your training that pay me 10,000. No, don't tell them. This is what you need to do. You now factor in government money. So what do? You now say equal to 107.5, right? Divided by 100. Divided by 100, then you now multiply it by the original amount that you want to charge them. So you now multiply it by 10 by this amount. So automatically you see that you are not going to tell your customer to pay you 10,000. You're going to tell them to pay you 10,750. Okay, and that guides what you're going to collect. But when you now come to this item cost, we are not putting this 10,750. No, we are actually putting 10,000. Is this the actual amount you collected? So let's say this is actual amount. Actual is actual amount. Then the other one is actual amount. Actual amount plus VAT. So you can see that one is just actual amount. The other one is actual amount plus VAT. So when you now come here, when you wanted to bill your customer, you've given them this figure because this is the right thing to do. You need to give them this figure so that they are not only going to pay your own money, they also pay government money to your account. So that at the end of the day, you need to remit the portion that belongs to government. So what you need to do is that when you now come to this place under item cost, just come and put the actual amount. Is the actual amount you're going to put. So let me put some figure here. So let's have this figure here. I have another one here. I have another one here. Okay, I have another one here and all that. So I told us that. So we are going to put the formula. So I have another one here. I have another figure here and so on and so forth. Then you now come over here. Let's auto-fill this one. We now double click. Okay, so fine. So now this is what you are collecting from your customer. Let me add this thing or equals. Yeah. So then let me also add this one here. Control C and Control V. Control V. Okay. So here, this is what I actually collected from my customers. This is what I actually collect. Sorry. This is what I actually collected from my customers. Let me put it as yellow. This is what I collected from my customers. However, when I want to pay tax, right? When I want to pay tax, I'm not going to put this one. This is what I'm going to put in my VAT stuff. And I copy it. I come here under my item cost. I come and paste it special. So I just click here and I click on paste 1, 2, 3. So that is how to pay special. So you see that here, the actual amount is what you're going to put. So automatically, once you populated this stuff, okay, automatically, this is the actual amount that your service worth. Now, they know that once your actual service is worth this value, now, you are also indirectly expected to pay 7.5% to the government, which we also, once you now put this schedule, once you upload it in Taxable is going to calculate the 7.5% of this your total cost, the item cost. So there are other things I need to also let us know because some questions will be coming out after this. Now, if you go up, some people will ask me, what if I'm into a non-vertical service? I render a non-vertical service. What if my item is zero rated? What if all those what if? You check it. There's a place where the color red. They know that people need those information. So this place is colored red. It's on the template naturally on its own. So you don't need to download. Once you download this template, automatically there's this place that is red. So here, if you check the formula bar, you can see that they say note for VAT status column 0 means vatable. So when you come to VAT status column, you discover that I put 0 here because I assume that all the services that we are rendering, we should pay tax on them. So they now say that here they say 0 means vatable. The services we are rendering, we need to pay VAT on them. Then the next one, they now say 1. 1 means 0 rated. 1 means 0 rated. So when you come here, you also indicate that. For instance, let's assume this transaction to this guy is actually 0 rated. That means that when something is 0 rated, it doesn't mean that you are not paying tax, but the tax you are paying on it is 0%. Okay, so that is what 0 rated means. So what you need to not show that, okay, though this thing is actually vatable, but the rate of VAT on it is 0%. So here you are going to indicate that by putting 1 in this VAT status is one you're going to put instead of me putting 0. The reason why I put 0 is because 0 represents that it is vatable. So that's why I put 0 there. But if it is vatable, but the VAT is at 0%, simply come here and come and put 1. 1 represents that it's 0 rated. So you put 1 over there across board. But if the transaction you are doing is actually VAT exempt, put 2 at this place, put 2 over here. So that once you upload this thing to Taxable is going to check this VAT status. This is what we form how Taxable is going to assess your sales for that period. If you put 0 rated, Taxable is going to calculate tax on this income at 0%. But if you put 0 here, which means is vatable, Taxable is going to calculate VAT on this at 7.5%. But if you put 2 here, it means that it is exempted. Taxable will not calculate any tax on it at all. So that is what that is about. So once you are done with this, simply come back to your Taxable and upload the file. But you can see what I'm doing here. This one, because I've already finalized everything on this filing, so this is not showing us a place where we need to actually upload our sales whatever. So it's not showing us a place where we need to put our sales figure. So, but when you are in any organization and you have not filed it, you will always have a place where you need to upload that sales value. So once you click on that and you're able to do that, then automatically when you also check, there are other areas also you need to check where they will tell you that, okay, do you have are there improved VAT? Probably before you were able to make those transactions, there were some VAT that you paid before you were able to get those items. So those improved VAT, there are some people that are into buying and selling. So when you're buying those things, probably you sell to other people. There's a VAT you paid to the person that sold it for you. So those are input VAT. So there's a place where you need to indicate it that, okay, based on this transaction or this income that came, I paid an input VAT and everything. It has places you need to populate. At the end of the day, it's very easy. It's easy like your e-tax. Your e-tax, the way you also do your PAYE. So it's very easy, but I cannot show you now because this has been done already. I can't show you, okay? So however, I think with that little information, you are guided on how to proceed, how to start, okay? How to start it. So is there any question from this, from what we've said now? Is there any question?
Hello, sir.
Yes, sir. I have a question, sir.
Okay.
This VAT is basically output VAT. Where we have input VAT, how do we file?
You mentioned it just now.
Okay. So as I said that.
Did you get my question, sir?
I get it. So once you get to your tax format, okay, it will allow you to upload this sales figure. The sales figure is actually calculating the VAT you actually collected from your customers. So it will allow you to upload this sales, whatever, the sales template into it. Then when you leave that place, it will now show you another place where you need to also put the output VAT that you actually incurred while you were trying to do this transaction. There could be an output VAT that you've incurred. They also show you a place where you need to put that. Okay, so it's as easy as that. Is that fine by you?
I
Is that
think
okay?
what he's trying to say is that, hello, sir, can I say something?
Go on, go on.
Yeah, what he's trying to say is that, you know, in VAT, in VAT, you pay the net. The net means the input VAT and the output VAT. The output
Yes.
VAT is the VAT that you charge your customer. And the
Yes.
input VAT is the VAT you suffer by supplying by your supplier, or you want to buy something from your supplier and you pay VAT on it. That is input VAT. So in trying to make remittance, you now deduct your input VAT from the VAT you charge your customer, that is output VAT. Then the net is what you pay as your VAT, which has a 21-day or 3 weeks period from the month in which the transaction takes place.
So thank you, sir. However, to add to what you said, sir, if you check that tax performance is not actually asking you to calculate tax for it. It's asking you what is the sales you made. Is that sales you made, the sales figure is what you're going to put. So tax performance is going to calculate the output VAT by itself. So also, tax performance is also going to calculate input VAT by itself. So there's a section inside tax performance where it will tell you, okay, how much did you buy? Okay, what is the rate or whatever? So how much item did you buy? So it will give you a space where, just let me go back to that. Let me go back to that place. So look at look at this stuff here now. Tax performance is not allowing us to do that net effect you're talking about. Say what is our input, what is our output, then you do the net. No, tax performance does not give you that opportunity because it knows a lot of people can decide not to even want to pay tax at all. Okay, so what tax performance is going to ask you is, what is the sales you actually made? What transaction did you transact with this guy? So how much do you transact with him? You put the actual amount that belongs to you. So it means that in a case where I charge somebody 400,000, okay, I charge somebody 400,000 for a transaction, and then the person also paid extra 30,000. Okay, so when the total the person paid is actually this plus this. That's what the person paid. But if I'm going to capture this, will I come and put 430 here? No, I'll not put 430 here, because if I put 430 here, I'm going to be shooting myself in the leg, because tax performance is going to calculate tax on 430. But I want tax performance to actually calculate VAT on 400. So is this 400 now that we now come and put here? I'll put 400 here, undermining the fact that the client, sorry, yes, the customer actually paid me 430. But I know that the breakdown of that 430 is that 400 is the actual sales, 30,000 is just a VAT on the 400. So what I'm going to put here is 400. Now, when you now get on tax performance, you upload this file on tax performance by itself will compute 7.5% on all the item costs. Now, once you have uploaded that, then there's a section on tax performance also that will also tell you that, okay, this transaction that you made, it's possible that you have incurred an input VAT. How much input VAT did you incur? It's going to give you a place to impute it by yourself. Okay, I incurred some amount, or it can tell you, what did you buy? Then it can calculate input VAT on it on its own. Here, this one is to calculate output VAT. The other one is going to also give you another place where you can also do figures, and then it will calculate input VAT for you, or even ask you to put the input VAT you incurred verbal or like that. So I hope that answers you, sir. I hope you are okay with that. Hello. Okay.
So I have a question, sir.
Okay, go on.
But I want you to show us where exactly on the tax promise where we can enter our input VAT in the situation that we'll have input VAT to remit.
Okay, so you can see that my tax performance I'm using, the account I'm using, will not give us that room because it has been filed already. We have gone past that stage on that tax form because we always file it monthly. So for the month, for this month, we filed everything on that tax form, except if somebody has another tax performance account on the call that he has not filed account, he has not filed for, and today is 21st. Naturally, all companies should have filed. Today is 21st, right? Any company that has not filed, if you have anybody that has not filed, you can provide the email address and the password. Let's use it to show you. But I'm telling you that if once it is past this period, as from tomorrow, okay, we can now give you opportunity to file for December. What we are filing now, we are filing for the month of November, okay? But after tomorrow, which is of it, it will now open another window for you to file for the month of December. So from 21st to another 21st of January, that is the period you can file for sales in December. So that's how it's going to be. So I hope that clarifies, sir.
Yes, sir. But sir, I thought that the input VAT is going to be remitted by the supplier who deducted it when I purchase something from him. And when it's going to be remitted, getting to tax promise, I thought that by the time I get to the tax promise to file my output VAT, that amount will have been shown on tax promise. But that's what I thought.
Okay.
Are you the one to now do to put the input VAT on the stuff, or the supplier will do that?
Okay, so this how it works. This how it works. You know, there could be a situation whereby the supplier even he collected tax from you and we remit it. There could be instances like that. There are many people that we even collect VAT from that they are not even registered. They don't have a registered company. They don't even pay tax at all. They don't even have a tax ID. But your own duty is to collect tax on behalf of the government, right? So once you collect tax on behalf of the government, let's assume we are a supplier to some other people. Our own is to collect VAT on behalf of the government. So what we do is that whether the person have a tax ID or not, when we get to tax promise, let me show you what we do. When we get to tax promise, okay, instead of us waiting forever until the person decide to go and do the needful, where you have your beneficiary, whatever here, in order not to waste time, you can beneficiary team, you can decide to put 0 and it will see past you. Okay, instead of me to start looking for, okay, what is the thing of this person? But most times, in order to do a standard stuff, get all the team of all the people. But what if you have a customer that doesn't have? Will you say because they don't have a tax ID, you will not sell to them? You will sell to them. So if where they don't have a tax ID, where you have under this beneficiary team, put 0 and it will still allow you to scale through. So I want to tell you that if you supplied your team when when you were buying and then they deducted VAT from you, fine, then they remit it. There's most input VAT, say, most of the input VAT, you may not even know that they deducted VAT for it, or they may not even make it so official that you know that okay, this is the amount, this is the VAT, this is this one. They may not even do all those things. They may not even ask you for your tax ID or any other thing. But you know what the input VAT is. So when you get your tax promise, okay, when you get your tax promise will give you opportunity to defend yourself. Okay, this is what I sold. Oh, I sold 50 million. However, before I sold this 50 million, they also collected tax from me. Oh, tax promise is going to give you another interface. That interface is where you are going to explain yourself. Okay, the first interface is where you are going to put your sales for the month. Then another interface that they will show you is where you now explain yourself that okay, I've shown you what I sold, but this is what I also paid. This is what I also incurred as VAT, as input VAT. They'll give you that place to put your input VAT. So I hope that clarifies, sir. Can you hear me?
Yes, sir. It's clarified, sir.
Okay. So
Hello, sir.
yeah, I can hear you, Mr. Oye.
What of a situation where we have nil return to file?
Okay, Neil, return to file.
Yes.
Okay. So just like I said if you go to this your template, you will see, because you see this template is showing that you are not there's this template here. Yeah, because you must always make a sales. They cannot say you didn't make any sales in a month, except you are saying you didn't make any sales. So if you make a sales and then that sales is not vatable, they gave you an option here. This is where they give you the option. They say note. Look at the formula bar. They say note for VAT status column, which is this column, for VAT status column, which is column F. They say items you should put. You should either put 0 when the sales for the month is vatable, or put 1 if the sales for the month is already
Sorry, sir. Sorry,
okay.
sir. I understand that aspect you are saying. As
Okay,
a consultant that rendered service,
okay,
it's possible there is no service, there's nothing, there's no income in a particular month.
okay.
So
So
that's what I mean.
all right, I get it, So what will you do? Let's see, on tax promos, I need to show you that. Let me see. I'm coming, let me check for that. Okay. Here also, because here we have something to file, there's no place for us to do that. Okay. So what I want to do for us is that because we already filed, you can see that we already filed and all that. So there's no place, no room for us to show that we have a nil, or we are filing nil, or whatever you call it. So there's no room for that in this our stuff. So I won't still be able to show you from this our tax format that we're using tonight. So and I'm sure that majority of people that that have tax formats, by this time they must have filed as well. So you will likely not see any place to actually prove that to anybody. So, but just go
Sorry,
on.
can I suggest something, sir?
Okay, go on.
Okay, from tomorrow, 22nd,
Yes,
another window will be open.
and yeah, that's
Can
what I
you
said.
just download those sample for new return, sample for input VAT, and sample for output VAT, and let's do recap in our next class.
Okay, no
Is
problem.
that possible?
I'll do that. No problem. I'll
Oh,
do that. Just remind me on the group.
okay.
Okay.
Okay,
Just
sir.
remind me
I will
on
remind
the
you before then.
yeah.
Yes, sir. Thank you.
Yeah. So that being said, so I think the next thing now, if there's no other question on this VAT that we've done, then we can go on and look at another thing that is also very, very important. Though our time is up, is already past 9. Okay, yes. Mistura.
So good evening. I'm sorry. The question I want to ask is not regarding the VAT.
Okay,
So I just want to ask a question of a company that works, like the parent company is actually in the US. That's where they
okay,
generate their income from. But they
okay.
have like employees here in Nigeria with the new tax law, because I don't think they've been paying company income tax since their income is not being generated here in Nigeria. But with the new tax law, are they going to pay company income tax?
Company income tax. So take it again. You say you have a company that is oversee, right? And
Yes,
then
yes,
they have staff in Nigeria, right?
yes, that is working for them.
That is working for them. So the question now is this:
But all their income is generated there in the US.
in the US. Now, the next question to ask yourself is this company a Nigerian company? Now, and then
No, it's not registered. Okay.
does this company have a primary place of assignment in Nigeria? Does it have any place that it's operating in Nigeria? So if it's just an overseas company, right? It does not have any physical office in Nigeria. It's not operating in Nigeria, but it may have staff in Nigeria that are working remotely. Is that what you're trying to say? Like it has staff in Nigeria that are working remotely?
Yes, but they are also working under a company.
So the same company or
The thing is that the name of the Nigeria company is different from the one in the US.
okay. So this is it. This is it. Since that company does not have any now, in fact, you mentioned CIT now. It's different from PAYE. Now we know that for staff, because what the only thing that linking that company with Nigeria, the link is just those staff that are working for that company. So we can say, okay, incomes that come to those staff, how do they treat income? So we can say that because they are Nigerians and they are in Nigeria, they might need to pay to Lagos State or wherever the staff are located because it's based on the location of the staff. So the staff is in Lagos or is in Nigeria. So rightly, whatever you are deducting from the staff salary, you are to remit it in Nigeria for the staff. But for the income tax, they have no business paying income tax to Nigeria. As far as they have no operation in Nigeria, there's no physical presence of that company in Nigeria.
No.
Working remotely. Now, the only thing that they actually owe the Nigerian government is probably because the Nigerian government is looking at the income that is coming to their staff, the staff that are working for them remotely, and those staff need to remit. They need to remit PAYE on behalf of those staff to Nigerian government. Other than that, I'm not sure they need to pay any CIT to the Nigerian government.
Okay. Well, if they want to file the pay, even they ask for like maybe for them to pay company income tax, like
Come again.
like if
Hello,
they
sir.
file for pay, because I don't think they've been filing the pay tax.
Okay, so sorry, the next person on the call, just hold on. So if they want to, I think what people do is that at January, companies are expected to file annual returns to LRS. Okay, so those annual returns, you file it to LRS, and that is where you tell them, okay, this is what we paid to our employee for the period for last year, and this is what we prospect to pay to our employee for this year. Okay, so I don't think they have no business with CIT. The LRS will not ask you for a CIT, company contact. What do they want to do with it? LRS will only ask you, the highest LRS will ask you is, how much did you pay your staff? Did you deduct the right deductions from your staff? Let's see. Okay, have you paid it? That is all LRS. That's the only business that they have with the Nigerian government. It's just in that aspect of the staff that are working in Nigeria. Other than that, if they don't have any business in Nigeria, they're outside the country, they don't need to pay CIT to the Nigerian government. Is that okay by you?
Yes. Okay. Thank
So
you.
somebody else was trying to ask a question or make a contribution. You have the floor. Hello. Okay, so I assume there is no other person trying to make any contribution. So finally, in order to wrap up this class, in the next 3 minutes, we should be done. So let's quickly look at how to do e-invoicing. So simply go to This is where you go to. Let's go to a new sheet, or let me go to, I think there's one I've opened already. E-invoicing. Where is it? Where is it? Where is it? Okay. So let me go to a new sheet. I go to a new sheet like this. So this is what you need to do. You now click, you now type e-invoice e-invoice.firs.gov.ng. So this is what you're going to type. So e-invoice.firs.gov.ng. So this is what you're going to type. So you now click on enter. Once you click on enter, I just see what is on your mind. What's going on? Hold on, I'm coming. Sorry, let me do that again. E-invoice, yes. So this is what I need. E-invoice, yeah. So this is what I need. Then I now click on enter. Let's see what's going to happen. e-invoice.firs.gov.ng. So once you've clicked on that, this is the interface that you're going to see. So from there, you now click on get enabled for e-invoicing as a taxpayer. So click on get enabled for e-invoicing. Then from there, you can go to the bottom. You see here it's saying it's giving you the privacy policy and all that. It's also giving you what we call, it said download the user guide. So when you go on this e-invoicing platform, try and download this user guide, because it's going to tell you everything you need to know. But me, what I want to show us how to set up your company for e-invoicing. So that is the place to start. Set up your company for e-invoicing. So the first thing you need to do is put your TIN number, your tax identification number. So let me search for one tax identification number that I can use. Just give me 2 minutes. We are almost done. We are almost rounding off. Please just give me 2 minutes. Tax identification number. Let me check for one. Just hold on. Tax identification number. Does anybody have anyone? Okay, let me check. Tax identification number. I'm coming. Okay, so let me check for the tax identification number of my company. Yeah, I don't know it offhand. So now I'll put this tax identification number. This so here we have 24277 601 / 0001. Fine. So once I put that, then the next thing I want to do is I want to ask what industry is my company. So you click on industry. Now for the industry, now you can decide to say, okay, let's assume we want to file for an oil and gas company. Okay, for oil and gas company that are operating in the downstream sector, go and select mining and quarrying. For those people that are operating in the downstream sector, select mining and quarrying. So once you select this mining and quarrying, you select it. Others are, we have manufacturing, we have electricity, gas, steam and oil, and air conditioning supply. We have water supply, sewage, waste management, and remediation activity. We have construction, we have wholesale and retail trade, repairs of motor vehicles and motorcycles. We have transportation and storage. We have accommodation and food services activity. We have information and communication. We have a lot of industries here. So what I'm dealing with, people that are in oil and gas, for instance, they are the ones that they make turnover that is very huge, that they might need e-invoicing. So what we do is that for people that are in the oil and gas sector and you are in the downstream activity, select mining and quarrying. Once you select mining and quarrying, the next thing you want to do is that you want to also select a sub-industry. So from your sub-industry now, for this your sub-industry, we want to select, let me check, I'm coming. I can't see clearly. Okay, so for this one now, for your sub-industry, you're going to select support activity for petroleum and natural gas. So support activity for petroleum and natural gas. So mining support service activity is what we're going to select. So you come over here and click here, then you click on mining support services. You click on it. Then the next thing is going to also give you a subset industry. Now for your subset industry, you're going to now pick support activities. Let me click on it. So we are going to be giving two options. The option you're going to click on is support activities for petroleum and natural gas extraction. That is what you are going to pick. Fine. Then when you do that, then the next thing it's going to ask you is that what ERP solution does your business use? You can decide to select anyone. Is it ZooBooks? Is it SAP? Is it Oracle? Is it Microsoft Dynamics? But let's pick on others because let's assume the one we are using is not actually here. Then the next thing is going to ask you is select reporting method. Select near real time. That's what you should select. Near real time is what we want to select, and that is fine. Then the next thing you want, what is the turnover that this your company is actually making? Let's say your company is actually making a turnover of let's say 5 billion naira and above. So if your company is making 5 billion naira and above, your company is a large scale taxpayer. So you select the option. But if your company is making between 1 billion to 5 billion, select this medium scale taxpayer. But if your company is making below 1 billion naira, then select small scale taxpayer. Okay, so that is that. So they have the category. So if your company is actually making 5 billion and above, select the last scale. If your company is making 1 to 5 billion naira, select medium scale. If your company is making below 1 billion, select the small scale taxpayer. So let's just choose medium scale taxpayer. Then the next thing we want to do is that we want to check here. They say, do you need Payroll enabled for a cross-border invoice exchange? So what they're saying is that here you can pick either yes or no. But the answer you're going to pick is dependent on what kind of transactions do you do. Do you do international transactions? If you do international transactions, click on yes. But if you don't do international transactions, simply click on no. So once you have done that, then you now submit your data. Now, if you submit your data, automatically you're going to get a mail in the email address that is attached to your tax promise. So once you send it, you get a mail in the email address that is attached to your tax promise, and from there you can click to activate E-invoicing for your company, and then you kick off from there. So I think this is how far we can go on E-invoicing. So just a simple recap: go to einvoice.firs.gov.ng. Once you click on that, then you go to get enabled for E-invoicing. Once you've done that, it will show you this interface. From this interface, you can download the user guide, download the user guide. So for step-by-step instruction to onboard your business. So it's going to give you step-by-step instruction on how to onboard your business. Once you've done that, then you put your TIN, tax identification number. What industry are you? You can see that we have a lot of industries. What sub-industry are you? Okay, then what subset industry are you? You also indicated it. Then what ERP solution system, what ERP solution does your business uses? You also select that. Then after that, you now tell the kind of reporting that you do. Are you doing with time reporting, or you are doing near with time? So I say you should select near with time. It's better. Then this one, what is the turnover of your company? Are you a large scale taxpayer, or are you a medium scale taxpayer, or are you a small scale taxpayer? So the wage is when you're making below 1 billion, you are a small scale. When you're making 1 billion to 5 billion, you are a medium scale. But when you're making above 5 billion, you are a large scale taxpayer. 5 billion and above, you are a large scale. Then the next thing is this section where you need to put to tell if you need exchange, if you need your invoice to calculate based on exchange rate that is prevalent in the location where you make your transaction with. So you can decide to put yes if you make international transactions, but if you don't make international transactions, just leave it at no. Then the next step is click on submit, and automatically you get a mail in your email address that is attached to your tax promise. And with that email address, you can finalize the setup for e-invoicing. So with that, we've come to the end of tax computation and tax filing. Any question before we call it a day? Can we go?
Hello, sir. Can I say something?
Yes, go on.
Yeah, I was thinking of the question raised by one of us. Is it Ms. Tura about that multinational company?
Okay.
The paying of a company income tax. That multinational company, from the question, from what she was narrating, is that that company does not have a significant economic presence in Nigeria. That is, they don't generate any income from Nigeria, but yet they still have staff in Nigeria. If they don't generate any income in Nigeria, then they are not liable to pay any company income tax. But as for the staff who are in Nigeria, they need to pay them depending on their employment status. If they are employed permanently, then they need to pay for their payee. Or if they are contract staff, then they need to pay 5% of their gross emolument, 5% of gross income, monthly gross income, as withholding tax to the FRS. So at the end of the day, they can be able to have and be identified as the people who are paying tax. They are still working in Nigeria and they are paying tax. That is my solution.
Thank you.
Yeah.
Hello, I have a question.
Okay.
Can I
So
go ahead?
wait, hold on. Before you ask a question, thank you, Mr. Is it Mr. Ahmed? Yeah. So okay. So that's that. So just like he said, that is the treatment. Okay. Make sure that those people, the only thing that you are owing them, since they don't have any significant influence in Nigeria, as the case may be, then you can decide to just go to the aspect of making sure that they are paying their right remittance based on the staff that is operating in Nigeria. Okay, then if they are contract staff, make sure you are deducting the withholding tax from them. And since these people are individuals, Mr. Ahmed, can you hear me?
Yes, sir, I'm with you, sir.
So since these people are individuals, you mentioned that they are paying to FRS, or is it or LRS? Which of them are you trying to say?
Yes, they will pay to LRS. That is where they reside. Where they reside, that is where they pay. Yeah, FRS now, just the way you said, they only received or they only accept armed forces, police service, staff of the foreign affairs. That is the only thing that payee. That is the only payee that FRS now collected. Even the resident in Abuja, they pay through internal revenue, FCT internal revenue service. So any other payee is being paid to the state, and depending on where you reside. If you reside where you reside, does not matter where you work. Where you reside, that is where you pay your tax. You pay your payee. Sorry.
Thank you very much, sir. So any
Thank
other
you.
question? Somebody was asking a question.
Okay,
We
my
are going to
question. Sorry, good evening. I'm trying to ask a question concerning the e-invoicing thing. From the explanation in this presentation, it shows that we can simply log on to the FIRS portal and then get registered with reference to our team, and then we get started by using the platform for e-invoicing, which means it will be synchronized with our own ERP or so. Am I
Yeah.
right?
Yes, sir.
So, and this is all we need to do.
Yes, that's all you need to do. So once you get a mail in your email address, sorry, once you get a mail in that email address that is attached to tax commerce, so once you get it, then you complete your setup because you need to confirm, because you cannot just use you need to confirm that actually you are the owner of the email address, or you can take anything, anybody's thing to go and try and register it. But in order for you to be able to have access to that email address, to confirm that it's actually the company that is initiating that action. You understand that now? So finalize the process from the email
Then
address
what's the
that's
place of an assessor? What's the place of an? It's like I learned there's you have some appointed accredited agents or something for this invoicing. I don't know. Do they really have a place in between the taxpayer and then the FIRS on the e-invoicing issue?
I didn't get this your question. Can you be audible? I can't get I can't hear you
My
clearly.
question is straightforward. I learned there are some accredited agents by FIRS that
Okay.
does the invoicing thing. Are they actually doing anything different from this we have just described? I just want to know. Do they really have a place like in the process or no? The important thing is just for you to get registered and then get synchronized by the process. That's all.
Yeah, so I think this is the basic thing you need to do. Get synchronized for the process. Once you have been able to attach, though I have actually not I'm just taking us, okay? So there is not all companies that are actually operating it for now. We understand that now. So but with with more practicals, everybody will understand what it entails. But for now, I will just say that to get started, just follow the process that I've taught you and finalize the process, and let's see what follows. Then you can always ask questions once you've done one step and you need more clarification. You can reach out to me. I will be able to provide you more guidance on the process. Do you understand that, sir?
Okay.
A question, sir.
Sorry. By any chance, do we have access to video of this lecture? Because I'm joining for the first time this evening. I'm sorry.
Yeah,
And the
you
point
will
I
have
joined was
access.
the point of the e-invoicing thing. So I just want to know.
Yeah, you have access to it. Yes, you will.
Okay. All right. Thanks.
Yes, sir.
Sir, my question is this, sir. This e-invoicing system, for which or for what category of taxes are they going to be deployed for? Or is it
For what category?
eliminating PAYE and VAT payment via e-tax and other
No, it's
platforms?
not. No, it's not. E-invoicing, I think, E means electronic invoicing, right? So now, if I think
Yeah.
for companies that have big turnovers, right? So in order for you not to start arguing with FRS, this is what our invoice is, this is what automatically you are synchronizing your invoicing system to the tax formers so that there's no automatically it's going to generate all the necessary deduction, the VAT, and whatever is necessary to be deducted. So I think you can also read more on it. For instance, if you go on that site, you will see that, but it's not replacing any tax actually. It's not replacing tax. And you know that from that your invoice also, that is where you record your sales. From there, it generates, for oil and gas company, they have, they don't pay, they pay CIT as well, but they pay, there's something they call, I'm trying to remember, now we don't have petroleum profit tax. There's a name that they call it. So, and it also warrants you to also do company income tax. I don't know if anybody is conversant with oil and gas industry, but for normal companies, you also need to do your CIT. So what it does is that, from your invoice, that's where you will generate your sales. From your sales, you are going to pay your VAT. From your sales, you're also going to start your income that you're going to use in your company income tax and everything. So there is not going to be any argument back and forth okay, we made this so amount, we didn't make it. Everything is already synchronized. So the reason why these people are so interested in you synchronizing your sales is so that at a glance they can easily monitor what is being done, and it's for big organizations. Okay, so I will advise us to read more about it. Read more. When you read more about it, you have more questions you can ask. I can also still provide more answers. I hope that is fine. Hello, sir.
Yes, sir.
So any other question on the call?
No question.
Okay.
Just like you have said, the e-invoicing is to synchronize your turnover. You know, most Nigerian company with their tax consultants understate the turnover.
Yes.
This e-invoicing now, the understatement of turnover will not be possible because as you are selling, they are having the records.
Exactly.
So when you prepare your own financial statement, you state your turnover, they reconcile it with the figure they have. So that is the objective behind the e-invoicing. Thank you.
Thank you so much, sir, for that wonderful contribution. So, in the absence of no other question, we will want to call it a day for today. We continue tomorrow, and I hope that we've been getting value for our money for those people that have been attending the lectures. So already we've
Yes.
seen